The MPC decided to keep the repurchase rate at the current level of 8.25% per year. The decision was unanimous.
Let's get some reaction now and speak to Annabel Bishop, who is an Investec chief economist. Annabel, let me thank you so much for your time this evening. It was in line, of course, with market expectations. And I wonder, for our viewers who are watching tonight, is this a relief at all for some consumers, especially those who've been finding themselves under immense pressure, given how things have been looking on the financial front?
Yes, hi. Look, I think it's the best that can be expected. We didn't get an interest rate hike, which is good news. And of course, the South African Reserve Bank kept interest rates unchanged as we still are in high inflation territory. There is an expectation that inflation will come down next year and, of course, regain the midpoint of the target around the middle of next year. And that, of course, would allow eventually at that period for some interest rate cuts.
And I suppose then that could be good news for some who are watching who say, let's just hold on until some point. But I suppose when you look at what is happening right now, it doesn't look like we're out of the woods just yet. I mean, given the fact that food inflation ticked higher in October, rolling blackouts continue, among other risk factors as well.
Yes, you're exactly right. And let's remember that blackouts and, of course, the impact of congestion at the ports that Transnet's suffering, the low capacity on the rails compared to demand, all of those factors add to supply side costs in South Africa. So we're actually seeing an environment where, with the higher fuel prices that we saw coming through in October, remember the latest inflation print was for October, we actually saw a culmination of the supply side pressures pushing up inflation. Demand is quite subdued in South Africa because of the higher interest rates, and of course is one of the reasons why why interest rates are likely to remain high for longer in South Africa. We're not expecting a cut in January next year either, which is the next interest rate move decision that's in the current interest rate MPC meetings, but of course it is also the first meeting of next year. For consumers in South Africa, they will need to continue to try and be careful in terms of expenditure in a high interest rate environment. But as we said, hopefully as we move into the middle of 2024, we're going to see interest rate cuts begin.
And I suppose how much then of a worry also are some of the geopolitical factors that we've seen?
Yes, I think, that's exactly right. Look, we haven't seen much impact on the oil price from the Middle East conflict. Initially, there was a bit of a lift, and then it has started to come out over the last few months. In fact, that's the reason why we've actually had a petrol price cut in the month of November, and of course again now likely when December comes around, and that's because international oil prices have lowered somewhat. The rand unfortunately has seen a bit of weakness recently, but overall we think that the rise in inflation in October is temporary, and that November and December will see lower inflation figures, aided down by the fuel price cuts. And of course, the first quarter of next year should again see inflation stabilize and hopefully come out a little bit lower, and we move gently down to the middle of next year. We are not seeing a sharp, quick downward trajectory in inflation. Instead, we're seeing a bumpy ride, some months with inflation higher, some months with inflation lower. And of course, this is something that does worry the South African Reserve Bank.